Hello everyone, hope you're all having a great week. My name is Drew, the host of Number Behind. Today I'll be sharing the second half of the interview with Will Rhind, the CEO of Graniteshares, going over one of the indicators that predicted the market crash 100% and see where we are in 2023 within this pattern. Will also share his thoughts on having a huge portion of cash at this point of time in the market, and also how he sees the potential of Bitcoin ETFs coming into the market as well. He also ended the interview sharing his most important advice regarding investments and how he handled his mistakes during his career in the investment world. So with that, let's get into the interview. Now, as I always say before getting into the interview, I wanted to share that Moomoo is having a great promotion, giving out 16 free stocks, including either Tesla or Google, which I don't think anyone should miss this opportunity. Now, if you open an account and deposit $100, you get 5 free stocks. If you deposit $1,000 and keep it in your account for 60 days, you get a total of 15 free stocks. And if you deposit $5,000 and keep it in your account for 60 days, you will get the 15 free stocks plus either Google or Tesla. So if you want to receive a potential of 16 free stocks, make sure you click the link in the description below.
I'm not an expert in oil, but I know that, petroleum goes into almost everything that we use. And if oil goes up to 100, do you see that the inflation that's coming down right now, there's a possibility that the inflation is not done and that it could actually rise up again?
Yeah, I mean, that's what happened in the last couple of weeks in terms of the inflation numbers that came out, albeit it's a small amount, but it's still kind of going in the wrong direction because of the increase that we've seen over the summer in energy prices and food prices. So gasoline prices, increasing, and that all feeds into inflation numbers. So it could cause a problem again, but most likely this time it could be a little bit like what happened just before 2008, where, oil briefly rallied to almost $150 a barrel. Before then, the whole economy came down and it went down to about 30, I think, at the low. So it could be one of those situations where you have a flourish in oil and that creates a lot of demand destruction in the economy. And that's maybe one of the tipping points that causes the market to come down.
Right. I think that's something I was also curious. So I look at the inverted yield curve, almost every day these days because it's climbing and it's uninverting. And I think based on the previous pattern, you have a steep inverted yield curve, it uninverts, and then 4 to 6 months, you have the recession. But the other thing is, I've heard that in most of the recessions or market crashes, you have an all-time high, then you have a steep pullback, and then you have another all-time high that makes people think, oh, it's over. And usually we see like a melt up that we saw, in the dot-com bubble or even the subprime. But do you see the possibility that maybe we might have another melt up or rise before the real major crash comes in 2024 or in the future?
Quite possibly. And a lot of people were talking about that this summer, when, certainly some of the stocks like Nvidia you were talking about, had a huge run this year with AI. And not just Nvidia, but a lot of the big tech companies had really big runs this year. So I think there was some talk around, July, August time, that there could be another melt up, that was a kind of final throw. That hasn't happened that way, and don't think it was. I think that this year really has been about fundamentals for a lot of these companies, and the earnings have been good. And a company like Nvidia has justified the stock move by posting amazing earnings. So it's certainly the case that can happen and has happened. A lot of that is just, emotion that people, put into particular stock market highs. When market comes down, people want to buy, not knowing that, perhaps that might be the market kind of on its way down again. But, we'll have to see. This time around, people always say it's going to be different, but we'll see.
Right. I think I always hear that this time is going to be different. But people who are experienced in the market say, we'll see.
Yeah.
So
it's never that different.
Oh, it's never that different. I think another question that I had is, I think Ray Dalio says that, cash is trash, but for your personal investments, do you think that having cash on the side at a market like we have right now is a good option? Or do you think even in an uncertain market, you should be invested 100% in an ETF or some sort of asset?
It kind of comes back to the question you raised before, which is it really depends, I think, on time horizon, because at some level, if you think about a retirement account, so a 401k, etc., probably most people, if they're young young up, and even though it should be in 100%, in equities, and you don't change that, regardless of whether there's a threat of a recession or not. You keep adding to your retirement. So it really depends on time horizon. I think if you're a market timer, or if you think you can time the market, then clearly that would be the time to pull back and maybe have some more cash, etc. I'm not saying that that's just about market timing, but that's when I think people want to be a little bit tactical and try and think that they can get an edge by behaving in a certain way. It's difficult to do, but again, I think the most important to think about is always time horizon, and that over the long run, the market will go up, but you have to be patient.
I think recently there's a lot of big institutes like Fidelity or even BlackRock trying to file an ETF for Bitcoin and these cryptocurrencies, and was wondering what you thought about the whole category of crypto becoming an actual asset for normal people to have the ability to even invest in. Do you think that's very, very risky, or do you see Bitcoin ETFs being a real thing in the future?
Wow, we could talk about this for hours. I personally am not that into it, I have to say. So the reason I think is that I always kind of come back to simple principles, like what problem does it solve that exists today? And when I think about all the things that people who are very pro cryptocurrency will say, none of it ever feels like something that is genuine, in terms of solving a problem, a real problem that will make everybody's life better. Where I do see it clearly is a speculation, and a lot of people who got into crypto and saw the prices skyrocket, very much from a speculative perspective. People did very well, and I could see the attraction in that. I think also when the price crashed, as I said, the first kind of crypto winter, people said, no, it's not about the Bitcoin, or it's not about the crypto, it's about the technology, the blockchain technology. Then obviously when the blockchain technology didn't necessarily advance to anything that was, necessarily claimed by, serious people who adopted crypto, price obviously rallied again, and people said, no, it's not about the blockchain technology, about the price. So I think, look, there will be ETFs on crypto, and I think so long as people remain interested in the asset class, will still be there. But there are a lot of regulatory problems that have led particularly here in the US, regulators to kind of regulate a lot of the alternative coins, out of the market. So the pool of coins available shrunk a lot. Things like Bitcoin will probably survive, but I think the future has to depend on whether people can get back on board with the prospect of the price increasing, from here. And I think to buy it at $30,000 or whatever a coin, you have to believe it's going to 60 or higher, really, in order to do that. And I'm not sure that group of investors, I think, is a lot smaller now than it was before FTX and all of the other scandals.
I think that's why, Warren Buffett and Charlie Munger says that it doesn't have any intrinsic value, and all you're doing is just waiting for the next person to come in and buy it at a higher price.
That's it. And that's always tough, really speculative.
So you see, you're not in any crypto. That's not your game for investment, I guess.
That's not. We have a ETF on Coinbase, so we have a levered Coinbase ETF. So we use that because there was no way to get leverage on crypto in an ETF. And so Coinbase is a good proxy for crypto and for Bitcoin. So we have that product, but other than that, no actual crypto.
I think a lot of my audiences are beginners, or they just got into market when, at 2021, when the market was going really high. And a lot of people, I think, have lost a lot of money. But I would love to hear if you had like a very important advice, or you would tell your, son or family how you would approach stock investment. I would love to hear, your philosophy. And then finally, I'm pretty sure you had made some mistakes on your, career path, and would also love to learn from, your mistakes and what you kind of learned from those.
Yeah, I think going back to the boring answer is always that you invest in broad benchmark, S&P 500, etc. And it's really about the timeline. And obviously, the longer you can hold it, the better off that should be over time. And so you can really make it as simple as you want. But like you said, I think when it comes to investing, and if people have lost money, in 2021, or looking, the positive about that is that with any investing, it's a skill or it's a discipline, and you need to be doing it to start learning. So you can't you can't become an expert in investing without starting somewhere. And so even if you lose money, they're still teaching you something. Like you're going through an experience whereby I would hope that all of that makes you a better, or maybe not necessarily a better investor, but makes you more knowledgeable about the market and about how things work. And I think, building up that knowledge is ultimately really helpful. It's just whenever we learn something new, there's not necessarily one way to do it. And we have to go through a learning experience, to develop that discipline, to develop that skill. And so I think that's really what the key is that as long as people are doing it, so you start by saying, most important thing is to invest. So just to get started. And don't worry too much, clearly assuming that you're not talking about risking a huge amount of capital, a small amount of capital, that you're prepared to risk. And then it's really just learning.
Wow, thank you for sharing that. I think we kind of gone through a lot of topics today, but again, I just want to really thank you for your time. And I think as the market changes by the end of 2023 or even next year, I would love to follow up and hear your insights on how the market changes and have you as our guest on our future interviews as well. So again, thank you very, very much. I know you're a very busy person, but thank you for accepting my invitation and being a guest on my channel.
Thank you, Andrew. Thank you for having me. It was a pleasure talking to you.
All right. Thank you.
Thanks.